I do see Jeanette Weldon here, who oversees Chesla. Jeanette, welcome to the working group, and we'll start off with you with your presentation. I believe we have about 10 minutes, if I'm not mistaken, set aside for your presentation, ma'am, and your remarks from you and your team.
Thank you. And I wanted to just introduce who we have representing Chesla before we get underway. So
Please.
I'm Jeanette Weldon, Executive Director. I'm joined by Josh Hurlock, who is Deputy Director, and also Dan Junji, who is Government Affairs and Communications Specialist. And before we get into the presentation, Dan, did you want to make any comments, or are you good?
Yeah, thanks, Jeanette. So just to give an overview again, so Jeanette Weldon is our Executive Director. Josh Hurlock is our Deputy Director. And just to provide a high level, of insight as to what exactly Chesla does. Chesla helps Connecticut students and families finance post-secondary education through affordable loan programs, scholarships, financial literacy programs, and workforce-aligned initiatives. Jeanette will be providing you with a high-level overview of Chesla, as well as some current initiatives we're undertaking with respect to legislation we're pursuing to help close the financing gap that will be created with the recent elimination of the Grad Plus loan at the federal level. And Josh Hurlock will be providing you with an overview of some of Chesla's current and prospective programming. With that being said, I'm happy to turn it over to Jeanette.
Thanks, Dan. So if we can, thanks. So just a quick overview. Chesla was created in 1982. The purpose of it is to help Connecticut students and families finance the cost of higher education in a cost-effective way. We fund our loans by issuing tax-exempt bonds in the public debt markets. So we are not given money by the state to make loans. We have to go out and borrow money to make loans. And then we have to use loan repayments to pay back those bondholders. So that puts a constraint on us in terms of how low our interest rate can be, for example, because the loan repayments have to be sufficient to make payments to our bondholders, so we're not defaulting on our bonds. Our bonds are indirectly backed by the state of Connecticut, so that helps with giving us a lower cost of funds, which we can then pass on to borrowers. So we issue bonds about once a year in the spring, and our bonds are typically very well received. But we do offer several other products besides loans to undergraduates, and I'll turn it over to Josh to go over the programs that Chesla offers.
Thanks, Jeanette. So for our in-school programs, we first have a financial literacy portal called CT Dollars and Cents, which is a one-stop shop to help plan, save, and pay for college. We then have multiple scholarship programs for undergraduate students, students pursuing a certificate scholarship in healthcare manufacturing or CTR teaching, and also opportunity scholarships for graduate students. And then we have our in-school loan program, in which the loans must have a Connecticut nexus, either by the borrower state of residence or the state of the school attended. And the in-school loan program has one low fixed rate, which is currently 6.65% fixed, and there's no fees with the program. I then wanted to touch on our programs that support the workforce. So we have a refinance loan program for Connecticut residents that have fixed rates ranging from 4.99% to 7.74%, depending on the borrower FICO score and the repayment term selected. We then also have what we call the CHEST program, in which Chesla partners with employers to implement a student loan repayment benefit, so the employers can help their employees pay down their student loans. And then we also have the Alliance District Loan Subsidy Program. And with this program, we did receive $7 million from the state to fund the program. But with the Alliance District program, teachers, paraeducators, and school counselors in Alliance districts can refinance up to $25,000 of their private student loan debt. And as long as they continue to work in an Alliance district, the interest rate is subsidized down by 3%. And rates for the program, including the subsidy, are 0.75% to 2.49% fixed. And I would also say as of December 1st, the Alliance District program is expanding to include school psychologists and what's the other one? Do you remember?
I believe it's
Speech language pathologists. So school psychologists and speech language pathologists. So I'm gonna turn it back to Jeanette.
okay. I see there's a hand raised. Was there a question?
Yes, from Senator Austin.
Thank you. So I just want to point out that there's been a movement over the last couple sessions to get rid of alliance districts. And if that happens, this language is going to have to be updated at the same time. And I'd like to flag that for everybody's attention. That's all I wanted to make sure that I got on the record. Thank you.
Okay. Thank you very much. So one of the things we're currently working on is something to address the elimination of the Grad Plus loan program. So that's a federal loan program that the One Big Beautiful Bill Act terminated. And so the program has been around for at least 20 years. The estimated amount of Grad Plus loans in Connecticut is about $98 million. And the termination of the program is effective July 1 of next year. There is sort of a transition period or a grandfathering that's built into it. If you're already in graduate school and you already have a Grad Plus loan, you could get another one in order to complete your program of study. So if you're if you just finished your first year, you have 2 more years to go, you could still continue to get a Grad Plus loan. But if you're just going to be starting a grad program next year, then you would not have access to this program. So CHESLA has been trying to develop and collaborate on a solution that can help fill the gap created by the elimination of Grad Plus. And one of the challenges is that Grad Plus loans, you could get a loan for anything up to the total cost of attendance. And there was a very minimal, if any, credit check for someone who was seeking a federal Grad Plus loan. So as I mentioned at the beginning, CHESLA funds most of its loans by issuing bonds in the public debt markets. We have to be able to pay back bondholders. So the fact that many of the Grad Plus borrowers historically have been able to get loans without much of a credit check creates a challenge, because obviously we have to have, bond investors are not going to want to buy bonds backed by not creditworthy borrowers. And so we're looking for a solution that can address, go across all of the credit spectrum and offer something and that will address the needs of borrowers and hopefully also address some of the state's workforce needs. And one of the things we're trying to avoid is the for-profit lenders coming into the state and just offering loans to all students at some really exorbitant loan rates. So Josh is going to go through what we're thinking of and what we're proposing as our solution.
Jeanette and Josh, I just want to interrupt for a quick second. If you don't mind, would you mind sending any of the materials in which you're presenting to us right now to either Christian Tolarski or Akira Smith? It'd be helpful for us to be able to disseminate that to the group so that they can follow along after our call.
Yeah, certainly. We can do that. Yeah, so as CHESLA looks at replacing the Grad Plus program, we're viewing the Grad Plus program in 3 buckets, which would be 3 separate programs. A creditworthy bucket, middle tier of credit, and no credit or poor credit. I would also say we understand the challenge of marketing a program based on credit quality. So we believe the best path is to merge the credit buckets with targeted programs that we would believe would fit the bucket. So as we look at a creditworthy bucket, Chesla is well positioned to already assist this bucket. And we're also with this new grad program seeking to provide increased options for this grad plus replacement with multiple repayment terms. I would also say typically with student loans, in terms of underwriting the loan, typically our bond investors are looking to see that the underwriting criteria is satisfied at the time the loan is made. So understanding that many graduate students are not working and do not have co-borrowers, we're considering the utilization of future expected earnings to satisfy the underwriting criteria of the loan. And so, for example, with the Chesla financing, targeted programs for this loan program may include law, healthcare, and MBA programs. And so as we move towards the quote middle tier of credit bucket, we believe state GO bonds can be issued to fund the loans, similar to the aforementioned Alliance District program. And funding from the state would mean Chesla is not tied to our own bondholder and investor interest, and we could structure an offering to meet this credit bucket with relaxed underwriting criteria and potentially lower interest rates. And so for this middle tier of credit, programs for this bucket could include social work, as an example, a very worthwhile and noble profession, but also a profession where the earnings may not match up with the amount of student debt that they need to incur during their education. And then as we move towards the no credit or poor credit bucket, the third bucket here, we believe state funding would also be needed to help this bucket. And we believe that could be accomplished through a state grant program administered by Chesla, and targeted programs for that state grant or scholarship program could include programs such as the arts, for example. So I believe that's a lot of information in a short period of time, and that's the end of our presentation. Are there any questions?
Yes. So Representative Cabros DeGraw.
If we could go back to the refinancing slide, I just had a couple questions about about how many people take advantage of this actual refinancing, because I'm curious, especially now with the way things are going, are you seeing an uptick in this? What is the usual number, that sort of thing?
In terms of the refi program, I don't have the exact number of borrowers off the top of my head, but typically we're refinancing about $3 million on an annual basis.
Okay. And in terms of the newer programs that you're creating the buckets for, when do you anticipate, I'm guessing that it's not live yet. When do you anticipate those programs being ready to go?
So with the Chesla bucket, that would be a part of our normal spring financing.
Okay.
We would just increase the amount of bonds that we're issuing. With the state buckets, ideally we're proposing to seek $10 million in the special session, because we believe there's significant urgency now for the schools and the students. The schools are looking for an all-encompassing solution before they package financial aid in the early spring. So the main goal would be to get $10 million in the special session. If we're not able to do that, then obviously the state funded programs would move towards the regular session.
Okay. Thank you very much.
Anytime.
Thank you.
Happy to help.
Thank you. Representative Hughes.
Thank you, Mr. Chair, Madam Chair. Couple of questions. So with the increase in online graduate programs, are there restrictions about Connecticut students doing this in Connecticut for their higher education or graduate programs?
So with our Chesla program, loan program, there just needs to be a Connecticut nexus. So if they live in Connecticut, they can be pursuing a program basically anywhere in the United States.
Wonderful. And secondly, are we working with the Office of Workforce Strategy about those needed sectors for higher education? You mentioned social work. As a licensed social worker, I'm very aware of the acute need for certain sectors, especially like you said in healthcare. are we, overlapping those needs with the offerings that we're proposing to take over from the federal program?
Yeah, so we have had preliminary discussions with OWS, and as these programs develop, the intention is to work with OWS to target specific programs.
And I would just add, OWS is on the CHESLA board. So
Oh, perfect.
OWS has a representative on the CHESLA board. So we have a history of collaborating with them.
Perfect. And my final question, if you'll indulge me, is like I've noticed from a lot of our working professionals, they are outsourcing their student loan financing to these across the country high interest rates, private financing. So it sounds like this is an opportunity to pull some of that student loan debt financing back into Connecticut, right?
I mean, I think we believe so. I think CHESLA has some of the lowest rates in the industry.
Right.
And especially as we look at Grad Plus, we understand that the CHESLA financing can only be one portion, but that's why we want to work collaboratively with the state to have an all-encompassing statewide solution to replace the Grad Plus program.
Thank you. Okay, and that portal is going to be super important to get that word out, and we as legislators can help do that. Thank you so much.
Thank you.
Thank you, Representative, to the good chair, House Chair of the Higher Education Committee, Representative Haddad, and then I have a question right after him.
Thanks for the opportunity, and thanks to Jeanette and Josh and Dan for putting together a presentation for folks. Just a quick report on the likelihood of getting an additional amount of funding for the Grad Plus replacement program that you're suggesting. I have made that request to leadership. I know others have as well. If we're successful, it would only be because additional people, maybe some folks who are on this call, sort of add their voices. I haven't gotten a yes yet. I don't know if anybody else has, but we're still working on that. If we can't get that done here in a special session, it will be on the top of the agenda for the Higher Education Committee when we return, for sure. Because that matter is urgent, right? Like, grad students are applying for financing for next fall, and there's currently no good options for them. It's that private market that Ann was just talking about, which I think was going to have a tendency to be very expensive and may not include, in fact, some of the students that in that bottom tier, that third tier that you were talking about, where repayment schedules are more challenging, I think, maybe for some of the folks in those degree programs. The other thing I just wanted to say is, the refinancing effort that CHESLA does is really terrific. But I'm glad that we're going to talk about the public service loan forgiveness. When somebody's in one of those professions, it may not be the best idea for them to refinance with CHESLA, because the public service loan refinancing program doesn't apply to loans that are issued by CHESLA. It only applies to loans that are issued by the federal government. So, folks have been paying into the federal government for 10 years, and they're now having the rug pulled out from underneath them. But that doesn't, how much of this is temporary? How much of this is permanent? Who knows? That's one of those professions. You're really weighing your options about getting a better rate with CHESLA, but giving up on the possibility of having that federal loan forgiveness later on, right?
Yeah, that's a great point. I would say typically we discourage refinancing federal loans because of those benefits that would be lost. So you are correct.
And then last, you didn't talk much about it, but there's also, we also buy down the interest rate for people in certain occupations. We work, you're working very closely with OWS, and the legislature has suggested some specific occupations, but that has proven to be successful. It doesn't, it certainly makes repayment of debt, of those debts, much more manageable after they graduate. And so hopefully we can continue to do that. Thanks.
Thank you, Representative. In the documents that you all provide to us, Jeanette, would you be sure to also give us what a Chesla loan looks like undergrad versus grad? Because I think that's important for the working group to know. I also think it's important for the explanation to go through, because you did touch upon the credit worthiness of a borrower. If you could tell us how that is determined in terms of their approval of getting a Chesla loan, how many people need to have a co-signer behind them. I think that would be helpful for us to understand, because ultimately that impacts an entire family, and it impacts them for a very long, substantial amount of time. The thing that I'm clearly concerned about, and especially as we think about folks who are taking out graduate loans, is that they oftentimes are holding this debt, not just from their undergrad most times, but also if they're taking out for their graduate education, they're holding it far longer into their 60s and 70s. And so as we are seeing that affordability is a problem across the board and across the scale in terms of what we are deeming necessary as being good quality of life, we know that this is a hindrance for people to be able to try to achieve quote unquote the American dream. So if you could share that information for us so we can have a better understanding of how that affects us on a state level in the grander scheme of things, I think that would be helpful for folks who are not familiar with that.
Yes, we'd be happy to do that.
Thank you so much. Any other questions before we move on from Chesla? We appreciate you folks coming, and we look forward to you all joining us again in the next round.
Okay,
you.
thank you very much for the opportunity to talk with you.
Absolutely. Thank you so much. I would just like to move on. I know we're going to talk about the public service loan forgiveness program and kind of what are some of the challenges are with that in terms of its current state. Representative Cavros-DeGraw, if you don't mind, and if the working group does not mind, I'd like to just jump down to discuss FAFSA. I'd like to skip over item number 4 to go to item number 5 and item 6, and then we can come back to item 4 towards the end, if that's all right with you, ma'am. Great. Our statewide Connecticut student loan ombudsperson, Michelle Jarvis-Letman, is here to give us an update in terms of some of her work. Michelle, please go right ahead.
I just wanted to let people be aware of some of the things that I'm seeing in my office, even though I can't necessarily help people, but parents, especially who are trying to do their FAFSA with their dependent student, whether a returning student or a new student, they're coming up as defaulted now because they also have loans out there that they're stuck in this limbo, they haven't been paying yet. So that will impact those parents on applying for a Parent Plus loan, especially those who already have a Parent Plus loan. Now they can't get another Parent Plus loan. So I'm starting to hear some of that trend and like, what can I do? How can I get out of it? I need to get into a new repayment plan. There's obviously an even bigger backlog than the last time we spoke with the shutdown. So that's been a big piece that we've been seeing. There is a default resolution group that they can contact and try to get out of, but I think we're going to continue to see this uptick as this government shutdown lingers and processing is being heavily delayed as well. And that will impact, again, as students are applying off to colleges and renewing their FAFSA application, which it's been open. So returning students who are already attending, they need to complete their FAFSA. They need to get funding secured as well, because, you have to do it every year. So that's been the big thing I've been seeing from a FAFSA perspective. And I just wanted to make folks aware of that because that is concerning, because they're trying to do the right thing and trying to get into repayment and trying to get their loans out of the default status, but they're not able to. And now it's going to stop and delay their dependent student as well.
Michelle, can you share with us the percentage rate of those who are facing default in the state right now? And also, if you can just tell us a little bit about the volume of outreach that you've been receiving from people across the state and what some of those concerns might be outside of what you've just mentioned.
I don't have default numbers on hand. We have, even before the shutdown, getting information from the federal government has been slim to none. Getting info from the servicers has also been extremely challenging. And at some point, I think the Department of Banking needs to probably put a little pressure on them to get us that data. In terms of outreach and things that we're seeing is people just don't know what to do. They're nervous, they're scared. The PSLF thing, which I can talk about a little bit, is very scary for people. They're thinking they should just jump ship. They don't know what to do. They put all this time and effort into, you know, making these payments. They've decided their careers based on PSLF and the, you know, what they were going to do, and to have that potentially pulled from them is damaging. It's critical, and it's going to trickle this terrible effect throughout our state. People just want to pay. I mean, people are really trying to pay their student loans. I think that's a big thing that this administration is missing. People want to pay. Some of the numbers are outlandish. You know, they're jumping significantly from $200 payment to $1,400 payment, and they just can't afford that. And they're stuck and they don't know what to do. And it's hard for them to reach anybody to get some information and guidance for that for them. So I think there's fear. Unfortunately, you know, there's a lot of uncertainty, and without any, you know, guidance from the Department of Education, some people are just stuck, unfortunately. And, you know, we're trying, like, put in your application, keep a paper trail, make sure you document everything that you've done, everything that you should have done up until the meantime. But I think there's just a lot of anxiety right now with borrowers trying to get back into repayment so that they can be done with this. And I will say too, anybody who isn't seeking PSLF in the moment, especially if they're a Parent Plus loan borrower, I'm telling them to jump ship off of the federal platform and look for a refinancing option if it works for them, because there's no benefit for them, especially with the changes to the repayment structure, to stay federally at this point and with a very, very high interest rate. So I'm starting to push people out. If the PSLF is not on the table for anybody, we're talking other options at this point.
And I appreciate that. And I think just to go back to something that you had shared before, the outstanding federal student loan portfolio is over $1.6 trillion. And if you combine that with the federal and private student loan debt, it's now estimated at somewhere about 1.8 trillion or more. So that's actually higher than our national portfolio in terms of card and credit card and auto debt that we're seeing, but it's still a little bit behind the mortgage. So I just want to put that into perspective in terms of how large this problem is for us federally, but also statewide. Representative Cavros DeGraw.
Michelle, thanks for being here again today. We appreciate it. I know we had talked about this in the past where people were not actually being made aware that their loans were now back online. And so, you know, the way they were finding out was suddenly they had a credit score that was 200 points lower than it was previously. Are you still hearing from people that their loans are going back online and they had no idea? And so now that's how they're in default, or how they missed a payment, or?
I haven't had too many of those recently. It's more of, you know, I asked for a forbearance or my information is still processing, and now I have another payment due and nothing's been processed. So there's been that struggle of, again, this administrative forbearance and the backlog of paperwork that people are trying to get out of a forbearance. And now they're going to be late because that forbearance period ends. They get 60 days on an administrative forbearance when they submit paperwork. If the servicer doesn't update their paperwork in 60 days, their payment is due regardless. So now they have to try to get a hold of the servicer again to say, hey, you haven't done anything. I can't pay this, or I don't know what I'm supposed to pay. Please put me on another forbearance. So some people get caught in a circle, and that's what I've been seeing. Or some people can't apply for certain repayment programs now that are affordable to them. So again, so it's not the default part yet. But I have a feeling if they can't do what they're supposed to do, we'll start to see an uptick in that again.
Well, and just what you said about you trying to get a hold of people, whether it's the federal government or the loan servicers, that I can only imagine if you as an official are not able to get that information. I can't imagine what a borrower must be going through. And especially like you're trying to work, you got to call within work hours, you know, you're on hold, maybe you get a call back, maybe, or, you know, they say they'll call you back. Are they actually calling you back? You know, all of those things. I can only imagine how, for people who are, as you said, they're doing the right thing, they're trying to make payments, and they can't even get to a human being that can answer some questions for them.
Yep.
Very frustrating. Thank you, Mr. Chair.
Thank you, ma'am. I would say that, and I would hope that we as a bipartisan group can figure out a way, as the federal government is not necessarily meeting the moment right now, and there's a lag in terms of communication, if there's a way that the state can step in, certainly with the ombudsman's office and perhaps, I don't know, even with OHE, to help field some of these calls to get through for our constituents to the federal side of things, I think that could be helpful moving forward. Any other questions or concerns regarding kind of what's coming out of the ombudsman's office right now? I think what also would be helpful for us, Michelle, is if you can, I know that you have a lot on you, and we're incredibly grateful for your office of one doing so much for nearly 400, 4 million folks in our state. If there's any way that you can just provide us with any graphics with information that we can put into our newsletters that will also amplify your newsletter, I think that would be super helpful. I am deeply concerned, of course, about all student loan borrowers, regardless of the kind of loans that they have, but I'm more concerned, growing more concerned by the day, excuse me, with folks who are older Americans still dealing with the student loan debt and how that is affecting them before they even get their benefits each month. So I do appreciate that. And if there's any additional information that you would like for us to disseminate, please share that with us.
I'll do that. No problem.
Thank you so very much. If you could stay on just in case we have other questions that come to you, that would be helpful. Thank you. The Office of Higher Education.
Thank you, Representative. Well, excuse me, I'm Chairman Paris. So I'm Ram Abersteria from the Office of Higher Education. Also with us today is our legislative liaison, Noel Kidney, and the director overseeing the SLRP program, Mike Criscola. And with your permission, we can just jump right in and have Mike Criscola do the presentation.
Absolutely, please.
Okay, thanks, Mike.
Thanks, Ram. Good morning, everyone. As of November 1st, which was our last report out date, we have paid $683,000 to 250 successful SLRP applicants. We have a total of 1,248 current applications in, which we are continually reviewing for approval and working with those applicants who have submitted an incorrect document or a document that cannot be accepted. Since the report out date, we've also approved another 29 SLRP applicants for another $76,000 in reimbursements, which will have been processed today. We have pending selections in the amount of $66,000, and that just means that they are ready to go, and we are doing a final review of all of the documents and the reimbursement amounts to make sure that they are accurate. And I can entertain any questions that you have, or I can go deeper into the weeds on the program requirements, but maybe we could just open it up to the group.
Yes. First question, can you tell us in terms of the demographic breakdown, just where we're seeing the highest volume in terms of people applying versus them actually receiving the reimbursement? What part of the state are we seeing that? Is there a particular field based on the demographics? Can you just share with us some of those key points?
Well, we do have demographic reports that we can certainly share with the group. And currently, of the 250, we're seeing a concentration in our cities in Bridgeport, Hartford, New Haven, receiving the most of those awards at this point. We have a demographic report that shows income-based, and between $0 and $59,000 is where we're of an annual income is where we're seeing the majority of the awards being dispersed. As far as the age requirements, we're seeing between 18 and 30 is receiving the majority of the reimbursements through successful applications. And again, we have these reports through our database, CT Scholars, that can be shared with this group. If you wanted to take a deeper dive into the specific towns, we break it out by town and by city.
Thank you, Mike. I think that will be helpful. If you could provide that information to Kira or Christian who are on the call, they can email you directly, get that information. We can disseminate it out to the group right after this call. Thank you.
Absolutely.
Representative Hughes.
Thank you, Mr. Chair, and thank you, Mike. From your perspective, what does this program look like? How is it working compared to, say, 2 years ago?
Well, during the first round, which was January 1st through June 30th this year, there were some legislative changes that loosened some of the restrictions, and the most notable would be the fact that you couldn't have an advanced degree, a graduate degree, and qualify. The undergraduate requirement during the initial release was restrictive. So we're seeing more applicants that are submitting their master's degrees. The hardship expansion, so we have the volunteer hours hardship request that's possible, and we also have the educational piece. The hardship waivers, currently we have over 100 submitted for approval. And of those, we have less than 20 that have actually been approved. And most of that stems just from the applicant misunderstanding, even though it's on our website and our FAQ and on our program information page through our website, that if they submit a hardship, they have a hardship for the entire program. They're not submitting any additional documentation beyond the hardship request. We are reaching out to those people, just indicating that they need to also meet the other 7 requirements of the program and fill out a complete application. Internally, our process has been more streamlined as we fine-tuned CT Scholars. We are able to make the adjustments in the legislation to coincide with our processing of applications and awards within less than a month after we changed from June 1st to June 30th to July 1st. So that process is much smoother. We do receive an average of 800 to 1,200 emails, and that can range from document review to questions about eligibility and navigating our CT Scholar system, which we also created a how-to guide. So it gives everyone an opportunity to have a step-by-step procedural guide on how to apply. And we have a designated student loan reimbursement program email inbox. One of the big obstacles that we've experienced is that it is a reimbursement program. People are understanding it to be a forgiveness program, which it is not. And reimbursements are based on the amount of payments, dollar amount of payments made during 2024 to their student loan servicer. So our average award is close to $2,700. In the first wave, it was $2,600. It's in my opinion, it's just based on the fact that it's still from the 2024 payments. When we start January 1st, 2026, we move to the 2025 payments. So we should see that $2,700 average award increase with the new award period.
And when you said 800 to 1,200 emails, is that a day, a month? What?
Within a month.
Within a month.
We chart it per month, and that could be more or less. We do save all of our email interactions so we can reference it. We also have a transaction feature within our database that whenever we speak with an applicant, then we will chart that correspondence. So when they call, we can go back and reference it.
And finally, do you feel like you have enough staffing to meet this demand, especially as it grows?
The staffing that we have, they are excellent. They are part-timers. And Ram could probably speak to it a little more, but we went from, in the first wave, we had a 6-month period, and we were able to utilize our PSAs with more hours per week. And now that it's been expanded to the year, those have been cut. I don't know, Ram, if you want to chime in on that.
All I would add is that, we've been given a budget and we're working within that budget. And in addition to that, the work will be expanding, and we'll do what we need to do in order to get the work done. So I want to acknowledge the staff because it's a new program and they really jumped in and have produced a lot of work. We're expecting another $800,000 to go out between now and December 31st. And you're going to see when the new year hits, a huge expansion on the amount of awards that we're going to be given. And that's because, in 2000, people began paying out their loans in 2025, and in 2024. So as a result, when we hit 2026, you're going to see a huge intake in the amount of awards that we provide. So thank you for that question.
Thank you very much. That's all I have, Mr. Chair.
Madam Chair for now. Had to take a work call. Before I get to Representative Dillon, I just wanted to sort of remind people that the maximum award that anyone could receive would be $5,000. So in other words, if you paid in $5,000 in the year of 2024, then the maximum award you could get in this year, 2025, would have been $5,000. And you are eligible to participate in this program for up until 4 years, so a maximum of $20,000. And as Mike said, this is a reimbursement program. This is not a forgiveness program. So you do have to be actively paying on your loans in order to receive the reimbursement. I think that's really important. And that's actually part of our conversation when we get to the public service loan forgiveness. Representative Dillon.
Thank you very much, Madam Chair. Very quickly, thank you very much for your presentation. Do we have a one-pager with a graphic that breaks out some of the information that we've heard from you today?
Oh, we can certainly create a one-pager. We have developed a one-pager that we provide to our institutions of higher learning for promotion of the program, but it's specifically intended just to spell out the eligibility requirements and sort of pointing them towards the how to apply and how to utilize our database. But yeah, we can certainly provide some documentation on what has been presented today.
And that would include literature in Spanish for their parents, especially?
For the one sheet read that you would like?
We have adequate
Sure.
literature in Spanish, yes.
Absolutely.
Yes, and I guess that's it for now. Thank you very much.
Thank you.
Okay, Representative Collins Payne.
Hi, everybody. Sorry, my camera's off. I'm not dressed for the occasion. I just came back from the gym. But thank you so much for all you're doing. And I just wanted to ask a question about what the challenges are around getting more money out the door and into the hands of applicants. And this comes from the heart of a working mom who is helping a son who's in medical school and also has a child that just graduated from Duke, and I have parent loans. So this is really helpful. Thank you.
That's a great question. Yeah, so the obstacles that we face are each applicant has to complete an application. They also have to upload 7 documents, and those documents include their federal tax form, their student loan statement, as well as their student loan history. And both of those documents need to have some sort of identifier, a name or an account number, so we could tie it to the actual payments that are being made. That has been sort of one of our biggest obstacles, is actually getting the correct documentation from loan servicers like Mohila and AidVantage and Nelnet, in which we can identify and tie those payments together. The volunteer hours have been an issue. There was an expansion of those to cover our firefighters, our religious organizations, and we moved from the list of Department of Consumer Protection, which limited it to Connecticut volunteer organizations, to an approved 501c3. So that has made it a lot easier for our applicants to meet that requirement. On top of the volunteer hours, they have to submit a diploma or a certificate or license, and the certificate or license has to be recognized by Title 20. With the expansion to the advanced degrees, that's expanded our reach a little bit to get this out They have to complete a W-9 form because there's tax implications, and then they have to become an approved vendor of the state. So we get in all these uploads, they come into our system. Sometimes they come in all at once. Sometimes they come in bits and pieces, and our staff has to review them. It's a manual check, and we can mark them as pending or eligible or ineligible. And we will email the applicant and let them know what the shortfall might be in the uploaded documents that they've submitted. Like I said, we're receiving, I would say, an average per month of 1,000 or over 1,000 correspondence from these applicants and their family members, just trying to understand this and trying to fit into the requirements.
And I would also add, just if we were, I guess, circling back to the previous question, you know, I mean, what would also help if we had additional resources in order to be able to, you know, move some of the staff in order for either part-time, potentially, you know, just increasing those hours. Because the more hours that we have, you know, for staffing, you know, then the more output we can put in to the program.
Right.
Mr. Chair, would you like to take the comms?
Sorry, I thought I said perfect. I guess I was still on mute. Are there any other questions pertaining to to SLRP, which makes me think of 7-Eleven? Any other questions pertaining to SLRP? Anne.
Thanks so much. Ann Watkins from Student Loan Fund. Good to see you all, and good to see this energy around the student debt issues. We're glad for it. Mike, just a quick question. Did you say that the average annual income was for the SLRP awards was between 0 and 59,000? Was that, or did I misunderstand that?
Yes, that's correct. I'm just looking at my report to make sure.
Okay, so just a
Yes.
call for legislators when we think about extra hoops for people to jump through, when we're talking about volunteer hour requirements, when we're talking about all these other, you know, the 7 pieces of documentation. These are folks who are primarily low income, trying to do all of this with all of those stressors in mind. So just a call as we think forward about wanting to serve borrowers, really thinking about fewer hoops, easier process, not just staffing up OHE, but requiring less of borrowers on the front end. Thanks so much.
Thank you, Anne. We appreciate that.
I think, can I just interject? I'm sorry.
Yes, Noelle.
I can't find my hand to put my hand up.
It's okay.
So I think that was, Mike was saying, he was reporting on the majority of the recipients were between 0 and 50, that 50 amount. The actual amount of, I mean, the income level goes up to 125. Is that 125, 150, or 150 or 175 for a couple, right?
175 for joint, 125 for single filers.
So it's not limited to people between 0 and 50. That's just when he was reading the demographics, he was saying that the majority of those who have applied and been awarded were between 0 and 59. I just wanted to clarify that.
Thanks, Noelle.
Mm-hmm.
Thank you. Any other questions before we let OHE go? Thank you so much. I want to jump back quickly to the Public Service Loan Forgiveness Program. Representative Cavros-DeGraw, would you lead us in that conversation?
Sure. I just wanted to kind of level set for folks. I don't know how many people are familiar with this program, but this was the program that was actually put in, I believe it was 2007. It was a bipartisan effort in Congress and then signed by President George Bush in order to acknowledge that when people are going to become teachers, or they're going to become police officers or nurses, or all of these other wonderful community members that we have that often, incur debt when they go to college, that this was a way to keep people in their communities, to be able to provide the public service that they want. And frankly, you know, we were, as I said, we were at this press conference about the lawsuit that the 21 attorneys generals are engaging in terms of trying to get this program back online because the Trump administration has decided to take it offline. It was really interesting to hear from, you know, Representative Joe Courtney, who actually was in Congress at the time, discussing the fact that, you know, this is an incredible amount of service that these people are providing to our country in a different way than the military, say. But there are actually were, as he mentioned, many military people who also took advantage of this. And it's very frustrating because as we were standing there, some of the people that were from the various organizations, whether it was CEA or the AFL-CIO or some of the other, the doctors that were there speaking, you know, they were talking about the forgiveness that they themselves had received and what a difference it made in their lives and their ability to continue serving in the professions that they chose because of this public service loan forgiveness. So it's incredibly frustrating that we're in this position right now where it appears that they had kind of put it on hold in the first Trump administration. And then when the Biden administration came, then people were able to, you know, finally get sort of clear the decks and get that loan forgiveness. I know many people who actually were able to take advantage of that. And it was life-changing for them in their credit scores, their ability to take loans, their ability to buy a house, start a family, all of those things that we've talked about in previous meetings. So I just think it's really important that we talk about the fact that this is happening. Some of those people may actually be able to now apply for SLRP in, you know, if they are unable to get public service loan forgiveness. But it is really unfortunate because, again, it was a bipartisan effort to acknowledge that we really need the service of all of these wonderful people in our country. And here it's, you know, completely on hold or perhaps gone forever. And just incredibly frustrating, Mr. Chair.
Thank you, Madam Chair. We appreciate that. And we can provide more of an update around PSLF as it relates to what's happening in terms of the legal portion of that from our perspective as a state, and then also just what's happening as updates come in from the federal level down from the DOE. There was a conversation that we did have regarding the various programs here in the state that we have for student loan help and reimbursement. And so and that's what's on the agenda in terms of the update from OPM, from OHG, et cetera. So Connecticut has invested over the last year just $10 million in this fiscal year alone across 2 major student loan relief programs, demonstrating just tangible progress in supporting our workforce. The DPH ARPA loan repayment program has now distributed over $8 million in fiscal year 25, and that's helping to retain healthcare professionals in shortage areas. But a large part of that funding is coming from ARPA dollars that we're still able to spend. So that's not coming from the general fund. The only money that we have from a student loan perspective that's coming from the general fund is from the SLRP program that's being administered and run by OHG, and which launched this January. And of course, as you've heard from them, we've already reached over $1.5 million in reimbursements with strong participation already and moving forward among early career professionals, but also it runs the gamut in terms of those that it's touching. So OPM was kind enough to share with us a coordinating information across agencies to ensure that effective oversight was being done and that there's good data collection and long-term sustainability beyond the ARPA funding window. And there was an additional tax credit for which the governor's office was instrumental behind. And that tax credit expansion, which supports employers that help to offset the cost of loan forgiveness for their employees, is in effect. But as with any programs that are new, we won't see measurable uptake for that program until 2025 when returns are filed. And we expect most of that data to come in the top end of this upcoming year. So all of these initiatives are great, and they're still models for other folks across the country. And we have some information about that we can share with you. And Christian has those numbers and can update the group on that after this call. But we just wanted to give you a quick update there. Before we end this call, are there any other concerns or thoughts that we would like to just end with before we establish at least our next time that we will meet with the group? Especially while we have the student loan ombudsperson and a buds woman is very long to say. Michelle, I apologize.
Ombudsbud is fine.
Ombudsbud, and
Ombudsbud.
OHE here. Are there any other concerns or questions? Ann. Both Ann,
Thanks
not
so
both
much.
Anns. Sorry, Ann
Oh,
Watkins
sorry.
first, and then Ann Hughes. My apologies, Representative.
Thank you so much. Michelle, this is really for you. We asked about what OHE needs in terms of resources. What additional resources do you need in order to get the word out to Connecticut's more than 500,000 borrowers? Representative Paris, you're using a different number that I want to get from you too, because I think that's a good one to have hands on. But what do you need in the Department of Banking?
Staffing, honestly. Like I said, I am an office of one, and it's becoming increasingly challenging to take all the inquiries, do presentations, be in multiple places at multiple times, or just not being aware. I mean, there's a lot of people that still just aren't aware that this office exists. So trying to get promotion out there. I'm trying to get in with some of the union representation. I'm trying to make a big push for PSLF. If you're near PSLF, if you're in it, let's get you on the train. Let's try to get you done and completed, especially with these changes happening. So just support and staffing, honestly, just having people who will know what that, how to help push that agenda along. I have a lot of thoughts and things I want to do in the upcoming next few months about promotion of repayment plans, the changes to PSLF, the changes to loans, how we can spread the word. I started talking to some community colleges, some financial aid folks, just we all need to kind of come together and take a piece of it essentially. But I think just acknowledging that this office exists, and even though we can't necessarily like press a button and make changes for the borrowers, but we can at least help them and guide them through the process of understanding that they're doing the right thing or steer them into the right direction. And just be an advocate for them. Again, we can't really do, we only have so many limitations we can do with federal borrowing, but our borrowers, I think, deserve a resource, and to know that there's a resource available to them. I can't tell you the people that call and say like, oh, well, I called so-and-so and paid X amount of dollars for some financial person to tell it like, no, please use your state resources. So I think getting that out, and I say that like I need to be promoted more, but then I need help along the way as well. So that would be, I think, the biggest thing.
Thank you, Representative. Oh, or thank you, Ann. My apologies. I'm getting all of my Anns mixed up today. Representative Hughes.
Thank you. I was going to add to that. Thank you so much, Michelle. With the ending of direct file, do you suspect that this is going to become even more confusing for FAFSA filers to get the information that they need? And maybe we can figure out together how we can support again that gap in terms of ease of applying for all these different programs, and to figure out a way for folks to continue their education.
Yeah. And I will say that thankfully to past administrations, the FAFSA process has streamlined significantly, and there's less time to complete the FAFSA. I go in every year and I try one for myself, and as a renewal person, it took me 4 minutes, because it's like simple, clean, right into the point. And even a dependent student with their parent, 10 to 15 minutes, pending there's no unusual circumstances. So I think we'll have to see how things happen, right? Because right now we're using 2 years prior for taxes. So people have that information still, so it's still relevant. So we may not see some of those issues just yet. But I agree. And anyway, and I say this, even though we have a lot going on, anyway, we can help facilitate the FAFSA process and getting people to apply, I think is just as important. And then understanding what comes along with that in terms of borrowing, grants, and things like that as they move along through their education journey.
Okay, thank you.
Thank you. Rep. Sims.
Thank you, Mr. Chair, and hello, and everyone. This is a great platform to have this conversation. my question is essentially around the equity component. So my question is, what mechanisms will ensure equitable access to relief programs, particularly for borrowers in low-income minority or historically underbanked communities?
Thank you, Representative, for that question. And it's a valid one. And I think also part of the reason why we had asked CHESLA when they were here earlier, specifically, when we think about credit worthiness, many folks who are coming from working class families, more rural areas, also from, majority people of color, time and time again, they have to have a co-signer. That's where the student loan reimbursement program somewhat mitigates a lot of those challenges. But I think that Noel, and only probably Noel right now from OHG, can just answer how we're figuring in equity in terms of the SLRP program, and then in terms of CHESLA, they'll present that information to us, and we can dive deeper in terms of making sure that regardless of geographic space, race, income, that is something that we are looking at with a focused lens in terms of folks have an equal opportunity to get access to this.
Well, thank you. I appreciate that response. So is this working group, has the working group conducted an equity impact assessment to evaluate how proposed relief measures affect borrowers across racial, geographic, and or economic lines?
The working group has not specifically done that, Representative. Certainly was a thought in terms of the creation and implementation, as you remember, with the student loan reimbursement program. And so we can, as a working group, if that is a request from you as a member, we can focus on that this year if you like, and we can talk about how we might implement that during our next meeting.
No, I appreciate that, and I think that would be extremely helpful if we can start working on that in this new session. My last question is, so how can we prevent predatory lenders and debt collectors from exploiting gaps in state policies once the measures are implemented?
That's a very good question, and I'm going to leave that to Michelle, who will be able to give a little bit of an answer from her perspective as the ABUDS person. And then if you could, Representative, just send us the request and verbiage of what you would like for us to focus on for the next meeting to Christian or Kira. If one of you could reach out to Representative Sims, I'd like to put that on the agenda so we can discuss in the next meeting. Michelle, go ahead.
I think the Department of Banking, where I am housed, will need to have a greater role in ensuring these servicers are abiding by the rules and regulations set forth to them. Because they're private entities, we have a little bit more say in what they can and can't be doing and what they should and shouldn't be doing. So I think, they need to go in there more and, process exams, make sure they're kind of on the up and up. And then again, I'll revert back to letting our borrowers know that there's resources available to them, that they need to contact the Ombudsman office to make sure it is on the up and up before they try to make any sort of decisions. Again, that puts a lot of pressure here, but let's put the pressure here so that they're not being taken advantage of, especially when it comes to our more vulnerable populations. There's scams coming around. People are getting very sophisticated with their scams. So I think between those two things, that's that will help alleviate some of that pressure. People feeling like they just have to figure it out on their own when there are resources available to them.